Hey, Lorcan, how are you?
I'm excellent. How are you, Lexi?
I'm good, thanks. Thank you so much for hopping on with us today. We obviously are in a crazy situation right now with the whole world going on with COVID. I'm sure you've gotten a lot of questions that we have gotten, and I wanted to bring some value to buyers, sellers, and just our community in general who have these questions about the market and kind of what
Sure.
the heck is going on and where we see it going.
Okay.
So what have the last few weeks been like for you on the lending side?
Well, surprisingly, it's working.
Yeah.
So everybody's working from home. So if you can imagine, in certain companies, you'll see 4,000 people all of a sudden working from home, and it's still functioning, which
Right.
is, to me, pretty incredible that the
Yeah.
switch made so fast in terms of we're still all closing loans. So most lenders have just had the biggest month of closings they've ever had in their history.
Wow.
Refinance craze and the purchase craze that happened in the first 3 months of the year. We're still scheduled to be busy for April and May
Okay.
with finances and purchases. So it has not slowed down dramatically. The refinances have slowed down, but the purchases have remained steady. People are still coming to Charleston. People are still buying in general.
Awesome.
So we have seen some other things happen, but not material that would be effective to what we're doing here.
Right. And we're seeing the same thing on our end where, we have buyers and sellers who have to buy right now, regardless, just with their situation and work and whatever. So, we are still moving and grooving on our end as well. Another question, have you seen anything like this before in all your experience, or anything you can kind of compare this to for people
Sure.
that this is just throwing them a major loop?
I think this reminds me of the 2008 real estate crash and of Hurricane Hugo.
Okay.
Certain things happened and lenders changed the way they look at things, and the buyers and borrowers all changed the way they looked at things. So there's just been a paradigm shift with, wow, where's it all going? And so much of it's kind of unknown.
Right. Yeah. Okay. So if buyers are in a position where before all this happened, they were planning on buying, now they're kind of like, I don't know, what can those people do that aren't pressed that they have to buy? What can they do right now to put themselves in the best case scenario or position for either buying now or in the future?
So we switched to most of our loans, if they're not under contract yet, and even the refinances, we have them coming in to get approved without locking a rate, because a lot have gone up, and without finding a home. So we have borrowers getting completely approved where they could actually remove the financing contingency on a contract. I'm not recommending they do it or not, but they're approved. Now, the day before closing or 2 days before closing, Fannie Mae, FHA, VA, USDA are all now requiring updated employment verifications.
Okay.
And the risk anybody has is you can be completely approved, but just keep in mind the day before closing, everybody's calling to see, is your company still functioning? Are you still working? Has there been any change? As long as there's no changes, you're still approved, good to go to close. So keeping that in mind, if you're approved before you even offer, you can now get down to a 10 or 12-day closing, which shortens the risk that something's going to happen in between you're purchasing the house and closing on the house.
Okay, awesome. That's great. That's great to know. Are you?
And the other part of that, I'm sorry.
No.
I was just saying, the other part of that is there's zero cost up front, whether you're applying as a purchaser or a refinancing. We have no fees up front.
Awesome. Okay, cool. Are you seeing any issues on your end as far as getting verification of employment or appraisals in or anything like that?
No. So on the appraisals, all appraisals generally right now are called desktop appraisals, where the appraiser either just does a drive-by or they'd use the information on the computer on the internet. They don't actually enter the house anymore. So the appraisers are actually thrilled with that. They can work from their houses or get in the car and go out and just do a drive-by and take the photos. They don't actually have to inspect. So the appraisal is not a problem anymore. The verification of employment is going fine when the borrower gives the HR contact specifically.
Okay.
And then,
Okay. Awesome.
yeah.
And then as far as what are like the most popular questions you have gotten in the last couple weeks?
Most popular question is, what is your rate? So I think, again, that goes to, that's why we're recommending people get approved so that your rate is the actual lowest, because the time between approval and closing, the shorter that time frame, the lowest rates are available. For
Okay.
instance, today we might be quoting 3.5% on a new loan coming in that wants to rate lock. But if your loan is in approval status, ready to close in 15 days, you can get 3.125 today.
Wow.
So there's a difference in that rate that changes things for people if they're approved and ready to close.
Definitely.
Now those rates are changing 3-4 times a day. So just the difference between those two rates, and those rates aren't necessarily available to everybody. That's excellent credit, certain
Right.
loans, certain, but I'm just saying those rates are just the difference between one loan today that's ready to close versus not.
Awesome. Okay, cool. So what about for the buyer who says, I absolutely am just going to wait till all of this passes for my own comfort, blah, blah, blah. What can they do right now? Or what if they can't get qualified now? What are steps that someone could do right now while they're at home? They have extra time to kind of review their finances, their credit. What are some things they could do to improve their buying power?
So I would say 3 things. One is you can go ahead and apply and let me or our firm look at the credit report, review it with you, and make sure you're getting the absolute highest credit scores. And we'll advise people on how to keep that. The second thing is budgeting during the next 90 days. How can you streamline your budget down to the lowest possible part to increase down payment or decrease balances on credit cards to get highest scores? So we look at those 2 things. And then the third thing is still just going ahead to get approved, so that what we are expecting is in June, we're going to see some lower interest rates and things change a bit, assuming the virus has worked itself through within the 90-day period or so.
Right. Okay, great. So, yeah. So with that, where do you see things going in our market, specifically in Charleston, for the summer? With, everyone has this idea that we have a hot summer and spring market, and we do. Do you see that still happening here?
I think we're seeing 2 different opinions on that. I don't know which category I fall into, but some people are saying, June 1, July 1, it's going to be like a lawnmower starting up and zoom, we're going to be going. Other people are saying, no, it's going to be a very steady increase and things will begin to open up and move forward. I just don't know. I think Charleston's unique in that it's got shipping, it's got tourism, and it's going to be like letting the cats out of the barrel all of a sudden.
Sure.
When it lets loose, people are going to want to get out of their homes and go travel. Gas prices low, those things. You will see things change, I think, faster in this area than you will in others.
Okay, that's good to know. Lorcan, do you have anything else you would like to share from your lending side? Obviously, we talk to people and clients from, our real estate side, but we have found ourselves getting a lot of questions, I think, on the lending side. So we've been kind of directing people to lenders and you on that. Just anything else you would add right now, food for thought for people who are wondering what's going on?
Well, you're going to hear a lot of changes coming that have already come out. One is for people who need some help on their mortgage. Fannie, Freddie Mac, conventional loans in general will allow up to 6 months to 1 year on the forbearance, which you can apply through. There's actually no qualifying for that. You can call your mortgage company. It's on your honor system, and you can say, I want forbearance. It means you still owe the money at some point, but you'll be able to have payment plans back and things of that nature. So for anybody that's in help, call now to your current mortgage servicing company, and they will help you out. That's number 1. Number 2 would be just to stay in touch with whoever your lender is. You're going to hear a lot of information coming out in the next month as this filters through what we call the secondary market. Mm-hmm. So you hear certain lenders are not doing well. Before you listen to a lot of things that come out in the news, I would just kind of double check with the lenders as these information comes out, because the lenders are still under a lot of pressure. A lot of people all of a sudden are not going to make their payments. But I think the federal government's going to be stepping in to help with that as well.
Okay.
It has not ruled yet that even though they're saying the borrower can forego their payments for a while, the federal government hasn't stepped in to help the mortgage company still make the payment to the investor. So it's a little different there. You're just going to hear a lot of information about that.
Right. Okay, great. Well, Lorcan, thank you so much for jumping on. I will put your info below on this video when we post it so people can reach out if they have any questions on refinancing, starting a new loan, anything on that side. And once again, we just really appreciate you jumping on with us.
You got it. Anytime. Thanks. Bye-bye.
Have a good one. Bye.